Hey everyone, welcome back to the channel. Today we're going to be talking about wealth building strategies. If you're interested in building wealth over the long term, then you've come to the right place. We'll be discussing a few different techniques for building wealth, including investing in stocks, bonds, and other assets, managing risk, and developing a diversified investment portfolio. Investing in stocks. Investing in stocks is one of the most popular ways to build wealth over time, and for good reason. Historically, stocks have offered higher returns than other asset classes over the long term. According to data from Morningstar, the average annual return for the S&P 500 index from 1926 to 2020 was around 10%. However, it's important to remember that past performance is not a guarantee of future results. One of the biggest pros of investing in stocks is the potential for high returns. If you invest in the right company at the right time, you could see significant gains over a relatively short period of time. However, stocks also come with risks. Stock prices can be volatile and subject to sudden price swings, which can be stressful for some investors. In addition, some stocks may underperform or even lose value over time, which can lead to losses. Investing in bonds. Bonds are another type of investment that can help you build wealth over time. Unlike stocks, bonds are debt securities that represent a loan to a company or government entity. Bonds typically offer lower returns than stocks, but they also come with less risk. According to Morningstar, the average annual return for long-term government bonds from 1926 to 2020 was around 5.4%. One of the biggest pros of investing in bonds is the relative stability they offer. Bond prices are typically less volatile than stock prices, which can provide a more predictable income stream for investors. In addition, bonds can offer diversification benefits when combined with other asset classes like stocks. However, bonds also come with some downsides. They offer lower returns than stocks and may not keep up with inflation over the long term. In addition, bonds are subject to interest rate risk, which means that their value can decline if interest rates rise. Other assets. In addition to stocks and bonds, there are other assets that can help you build wealth over time. These might include real estate, commodities, or alternative investments like hedge funds. Each of these asset classes has its own pros and cons, and it's important to do your research before investing. Real estate can offer a stable source of income through rental properties or the potential for appreciation through property value increases. However, real estate can also be illiquid and require significant upfront capital to get started. Commodities like gold or oil can provide diversification benefits and potentially high returns, but they can also be subject to significant price volatility. Alternative investments like hedge funds can offer the potential for high returns and diversification benefits, but they can also be complex, illiquid, and expensive. Managing risk. No matter what type of investments you choose, it's important to manage your risk. This might involve diversifying your portfolio across different asset classes, investing in low-cost index funds, or setting stop-loss orders to limit your downside risk. Diversification can help spread your risk across different asset classes and reduce the impact of any one investment on your overall portfolio. Low-cost index funds can provide broad exposure to the stock market at a low cost, while stop-loss orders can help limit your losses if a stock price falls below a certain level. On the plus side, managing risk can help you avoid catastrophic losses and provide peace of mind. However, it can also limit your potential for high returns and make it more difficult to achieve your financial goals. It's important to strike a balance between risk and return that works for your individual situation. In conclusion, building wealth over the long term requires careful planning, research, and execution. By investing in stocks, bonds, and other assets, managing your risk, and developing a diversified investment portfolio, you can put yourself on a path to financial freedom.